I've managed to completely simplify my strategy by trading 2 candles only. Now, by keeping things as simple as trading 2 candles, it helps me decide whether I am buying or selling and how to enter each trade. So in this video, I'm going to go over the strategy that I use, as well as some trades that I took yesterday and today, which so far has made me $201 on my 5K FundedNext challenge. So let's get into the video. Here we have the hourly chart on the left and then the 1 minute on the right. And what I'm looking for is I'm simply looking at how the previous hourly candle has closed. And based on that, I am looking to take a buy or a sell, depending on if that is a bullish or a bearish candle. So when I say I'm trading using 2 candles, the first one is the previous hourly candle, and then the second one is the current hourly candle that I am trading. So today is Tuesday the 4th of November. This morning I got to the charts at 6 AM and I can see that the 5 till 6 candle has closed bearish. So if we zoom in here, we can see at 5 AM this morning, this is in UK time, price opened here, pushed down and then closed here. So when the 6 o'clock candle opened, I am a continuation trader, so I'm always looking at how the previous hourly candle has closed and I'm looking to take a trade based on that. So if it's bearish, I'm looking for sells. If it's bullish, I'm looking for buys. Now there are a few nuances to that. Just this morning, for instance, we have this bearish candle, but we can clearly see on the hourly chart that we are pushing into an area where price is rejected from multiple times. So we've got these wick rejections here, more wick rejections here, price is pushing into this area and it is bouncing. We've got 3 just from this morning. So when price came back down to here, yes, I am always looking to sell or buy based on what color the previous hourly candle is. However, we have to use a little bit of common sense, and I'm not looking to sell where we have pushed into an area where we've rejected from previously. So after this 5 till 6 candle closed, I wasn't looking for sells personally. So all I did was, I did nothing. I waited for the 6 till 7 candle to close, because the thing is with this strategy as well, if you are using hourly candles, there's potentially trading opportunities every hour. Usually between the London and New York session, Asian session slows down a little bit, there's not as much volume, but during the rest of London to New York, there's a lot of trading opportunities. So I didn't see any reason to try and force a sell here when we can clearly see that price is rejected from here previously. So I waited for this candle to close, the 6 till 7, and I was hoping that it would close bullish to be in line with how price reacted to this area previously. And that's exactly what happened. We had this bullish candle. So once we've got this bullish candle, I'm definitely looking for buys then, because in my opinion now, price has bounced and can at least push up to around here before we start seeing wick rejections. So I was definitely looking to buy from this area. So after we close bullish from 6 till 7, the new hourly candle opens here. Now what I want to see is the exact price action that we're getting. I want to see lower lows and lower highs, even though we are looking to buy, because what we want to do is we want to give sellers an opportunity to push price down with lower lows and lower highs. We want to see them create a low in price, and then when price comes down, instead of violating the previous low, we actually get a higher low, because then that shows that sellers have had their opportunity during this hourly candle. They've failed to push price further down than this low. And now I want to see the previous lower high that was created get violated for a buying opportunity. Because then that way we are in line with how the previous hourly candle has closed, which is bullish. We've given sellers an opportunity to push price down. Sometimes it's not going to shift like this. Sometimes price is just going to violate that low and continue down, in which case there is no trading opportunity. So we can see here, this is exactly what happens when the 7 o'clock candle opens, which is there. We push down to make these lower lows and lower highs. So once we've made this low, we would expect price to violate this low and just continue down like this. However, I was monitoring price and I could see that we actually fail to break below this low. So we've created this low, which is the wick on the current hourly candle that we are trading. It's pushed into the area where we've rejected from previously multiple times with these wicks. So I was looking for a buy position based off the previous hourly candle. I wanted to see price make lower lows and lower highs. Once we've made this low, we come back up to make a lower high. And then instead of continuing down, we have this shift where we now have a new higher low. So if we get higher low, there's potential that buyers are stepping into the market. So once we've got this shift in momentum, we can't do anything yet. We have to wait for a high to be broken. In this case, it was the previous lower high. Now usually I like to see this higher low shift a little bit closer to the low of the candle. It's just something I prefer to see. However, on this occasion, because I'm definitely looking to buy because of what's happened on the hourly chart, I was happy that if we broke this high, I could put my stop loss below the new higher low. Usually I like to include the actual low itself. However, I was more confident that price is going to continue up, especially if we break that high. So this is what the entry looked like. Now, if we go down a little bit here, just to slow time down a bit on Tradezella, we can do a live trade replay. So you can see that we got triggered into this trade here once we broke that high. Now all I'm looking for is, I've entered the trade now, so there's nothing else I can be doing apart from going to break even at 1.5. So that's one way I manage trades. I usually go for a 1 to 2, particularly with a higher stop loss like we've got here. So 5.5 pips is a little bit higher, and I usually go for a 1 to 2 based off the size of the stop loss. So once we got to 1.5, I went to break even, and I was going for a 1 to 2 just based off the size of the stop loss. And you can see that we entered the trade here, price pushed up, and then we exited the trade here. So if we look at this trade and we go into the playbook, I've already put that it was a 1 hour 1 minute shift, because I also look for 4 hour 1 minute shifts, but in this case it was the 1 hour that we used for our entry. We've got the entry criteria here that we have to tick off. So previous hourly candle for direction, 1 minute for shift. Yes, it was. We used the previous hourly to take this trade. We were looking at it closed bullish, so we were looking to enter. Current hourly candle in line with the previous 1 hour, which is something I forgot to talk about. So let's go back here for a second. So when I'm looking to enter these trades, I'm looking for the current hourly candle to be in line with the previous hourly candle and the way that we are trading. So we've got this bullish candle. We can see that at 7 o'clock, price opened here, pushed down to create these lower lows, so created the wick. And then what I want to see is, I want to see price flip into our direction. So we can see that when price opened here, we need to be above here in order for the candle to be green, obviously. So if we skip forward here, by the time we break this high, we can see that we are bullish on the current hourly candle that we are trading, which is just something that I wait for personally. So we've made the wick on the hourly candle. We've come back up. Price is now higher than it was when it opened. It's therefore a bullish candle. If we can break the high, which we know we do, while this candle is currently green, then I'm happy to take that trade. So if we end replay and go back to here, we can see that yes, the current 1 hour candle is in line with the previous 1 hour candle. It's the first shift. So after we made these lower lows and lower highs, this was the first shift from bearish momentum into bullish, which is how I like to trade. I like to take that first shift. What we want is when the current hourly candle has turned bullish, we want to be quite low down on the current hourly candle. Now the reason for that is, if we skip forward a little bit here, we can see that after we have this shift and we get triggered into the trade, if we look at where the current hourly candle is, it's opened here, tried to push down as we know, and it's only moved up this much. Now this is something I like to see, because if you look on the hourly chart, most of the time candles are only going to push so much. So we have these average ranges where price is usually pushing a similar amount of pips per hour, unless we have something like a news inflicted candle, so something like this. We don't really consider these because we wouldn't be trading after such a big candle. We're looking to trade after average range candles. So what we want to do is, we want to be getting into the trade when price is just flipping into our direction, ideally, because let's say that this candle had pushed all the way up here, and then we start getting lower lows and lower highs, and then we fail to break the low, shift and break a high, and we get our pattern, but it's all the way up here. If we compare this to previous bullish candles, we can see that we're looking to buy all the way up here when price has already pushed so much. So how likely is it to continue further when price seems to only be pushing a similar sort of average throughout the past however many hourly candles? So if we reset the chart view there, we can just see how big average candles are. We don't include these massive ones because obviously that's usually news inflicted, but we want to be getting involved in a trade just as the candle is flipping into our direction, because we want to be getting into the buy as early as possible before price has pushed its range. If it starts pushing higher than the range of how it has been pushing over the past however many candles you want to look at, then it's less likely to continue more than that. It's more about being involved when price is just pushing. So let's go back onto the checklist here. So entry close to flip, yes it was. 2 trades per session, yes we did. Minimum 2.5 pip stop loss, yes. Maximum of 10, yes. 1 minute structure was more than 2 candles before the break, it was. And then the exit criteria was 2R. So we've ticked off everything on that trade. So let's have a look at the trade that I took yesterday. So what we can see here is, from an hourly perspective, the 9 till 10 candle has closed bullish, we can see that there. So when the new hourly candle opens, we are looking for buys. We have got a level where we've rejected from previously a couple of times with these wicks, but we don't necessarily have to get too involved in that if it's not a clear level. Objectively, we're just looking at this as previous hourly candle has closed bullish, so we are looking for that continuation. And then from a rejection point of view, I wouldn't be worried about price rejecting until all the way up here. So we know that we can at least get break even before price can go up here. So we can take a buy simply based off the previous hourly candle. If you want to consider this area where price has bounced from previously, then that's fine. That just adds extra confluence to buying. Now what we can see is the exact same sort of pattern. Lower lows, lower highs, giving sellers that opportunity to push price down. So this is all I was looking at. I was looking to buy. Now we've done the exact same thing. We've come down here to make this low. So once we've made this low, we've come back up to make a new lower high. If we were bearish, we would expect price to violate that low and continue down. So if it doesn't, and we shift to then break this high, we are also bullish on the hourly candle that we are trading, then we are able to take this trade. Now I remember with this one I had to get in a little bit later simply because I was waiting for that candle to flip into my direction. So ideally I would have been getting into the trade here after we break this lower high. However, if we look at where this break is, we can see that on the hourly chart we're not quite bullish. So that is something that I wait for personally. Even though I was happy to buy this, I wanted just one extra confluence to make sure that we are buying at the right time, and that for me was the candle flipping bullish. So I believe I entered around here. Even though we've already broken that high, I don't mind losing a few pips just to have that candle in line with my direction. At this stage anyway, the more I trade this way, the more I trade these patterns, the more confidence I may have to enter before the candle is flipped. But for now, it's important that I wait for that candle to also be in my direction before entering the trade. That's just something that I do. So if we play this out here, we can see that we've already made this shift. So then once we break here, that is where I enter this trade, even though, like I say, ideally I would have been in here, maybe got a couple of pips. However, I was just more focused on the current hourly candle being bullish. So once I entered the trade, I did actually go for a 1.5 on this. Now I know that this is already breaking one of the rules on Tradezella, and that's simply a lack of discipline. The reason I went for a 1.5 is because it's a new 5k FundedNext account. I really wanted to get off to a flying start. I wanted to take a winning trade. It's just stupid. I should have just gone for a 1 to 2 like I usually do, because then when we did get out, it was a winning trade on the first trade in the account was a winning trade, but it was also sort of hollow because I knew that I'd already let my discipline slip by not going for a 1 to 2, which is what I usually go for. And yeah, it was just a little bit of a hollow win. I just wanted to get that trade, get that first one, get the momentum. But yeah, I definitely should have gone for a 1 to 2 on that, because as we can see, price did continue up to our 1 to 2 target. So yeah, need to be more faithful with going for that 1 to 2, which is how I usually trade. This one was just a little bit different just because I wanted to get that first trade under my belt. Yeah, it's not something I'm going to do again. That's why we only made $58 on this one. So playbook, previous hourly candle was bullish. Current hourly candle, by the time we entered, was bullish. We had to wait for that. It was the first shift. Entry was close to where the candle flipped. 2 trades per session. Minimum 2.5 pip stop loss, maximum 10. 1 minute structure, more than 2 candles before the break of the high. And then exit criteria, I can't check because I didn't go for the 1 to 2, which is a mistake on my end. And we learn from our mistakes, and going forward, I will be going for the 1 to 2. So hopefully it makes sense why I only use 2 candles to trade with. If you have any questions at all, please let me know in the comments, and I will see you in the next one.